The equity shareholders are getting a profit like a dividend. A mutual fund pool money from the multiple investors to invest the diversified portfolio of stock. The quantitative and algorithm trading strategy continue to gain prominence. So the real owner of the company, in this case, equity shareholders. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 2, Session 2, 5th semester BCom, Financial Institution and Marketing. The chapter name is Capital Marketing and Money Market. In the last session, which is completely related to capital, okay. In the previous session, which is capital market, you got more clarification how the capital market is contributing for the total economic development. So the economical development, which is including for agriculture, industry, infrastructure and new project development. Okay, so yeah, capital formation, any company, the capital formation, how they are getting a financial support. So you got more clarity about the financial structure, how it is working in India. Each and every country, they're having a separate financial system. So with the help of financial system, so the majorly when we are talking related to the capital market concept and money market concept, which is nothing but raising a fund. Okay, so why they raising a fund? Because of going for investment for industry, okay, or infrastructure development, or total contribution economic, or completely depending on the capital. So here, and today my agenda, you will get more clarity about the instrument of capital market. In the capital market, there are different types of instrument. Instrument, we call it as a financial product also, we can say here. Okay, the product means what? So using a instrument, we are raising a fund. How they are raising a fund? Either which is related to corporate, okay, corporate security, or government security, okay, or forward market. So obviously the capital going for instrument, with the help of instrument only we can raise it. So each and every instrument, there is an advantages as well as the disadvantages we are finding. So the risk factors are connected when you are raising a fund. Okay, any investor, if they don't have any idea about the instrument, what and all is available in the market, capital market, so obviously we need to select a best instrument which is giving a more returns. Okay, so no doubt the capital market which is going for the medium and long term. Okay, so always which is offering a for medium and long term purpose only, we are depending over the financial instrument. Now capital, either we are talking related to the corporate, like the small scale, small operation or large operation. So everywhere the capital, if the company or they try to extend the unit in the different country or different state or manufacturing, so there are too many lot of resources are connected for your operation. How you are raising a fund, it is very important. So using a different instrument, we are raising a fund. So, and what are the recent trend in capital market? We are not only focusing for India. In the worldwide, if you try to compare, there are different capital market instrument we are finding. Okay, so as an investor, now we know there is a lot of trend in Bitcoin and cryptocurrency. So which is also coming under the capital rising concept. So which is called instrument here. And the first one, instrument of capital market, once again I'm repeating, instrument we call it as a financial product. So as an investor, if they before starting to go for investment in the capital market, so they will specify, they are try to select a best instrument, so which is giving a more returns. Okay, so they are investing for the medium and long term purpose. Okay, the first one, the stock. So the stock can be which is including, for example, the corporate, government sector, government companies or private company. If they are rising with the help of stock, either they are using for the equity share. Okay, so the real owner of any company in the joint stock company, so equity shareholders is a real owner of the company. So they are having a voting rights. So obviously when they are the denominator, for example, the total capital expected by the the corporate is 1 crore. Okay, the 1 crores they cannot expect in one shareholder. So what they are doing, they are dividing into a denomination or small parts. So we call it as a face value. So for example, each share face value 1000 rupees or 100 rupees. So as per the investor share capital, we call it as a shareholders, right? As per the investors, they are trying to go for, based on their capacity, they are trying to go for investing how many denomination, how many shares they are purchasing, because it is depending on the shareholders capacity. So this present ownership in the company, just now I told, when the equity shareholders having a voting rights, obviously they are part of the owner of the company. So any equity shareholders at the time of liquidation, okay, the company when they are closing, so the real owner of the company, in this case equity shareholders, okay. So after settlement for preference shareholders, debenture holders, unsecured creditors, the final payment will go. If it is any remaining, the balance are available, then they try to distribute. The equity shareholders are getting a profit like a dividend, okay. So moving for the next one, bond, which is nothing but debt instrument, we call it as debt instrument. So here the bond or debt security, bond and debt security, which is rising for the medium term and long term, okay. So which is also one kind of financial instrument. So where the investor lend money to issuer, okay. So because the investor lend money to the issuers, means actually now in case of government bonds, okay, or private institution, they're raising a bond, okay. So the corporation and government, corporation means company, private company, so they can use this instrument to raise the fund, okay. So in exchange for the periodical interest payment, where in case of equity, as a company are giving a declaring a dividend, but in case of bond or debts, no doubt there is a payment like interest is paid to the investors, okay. So a payment and the return of the principal amount of the maturity, because there is a matured period clearly specified before going for investing, okay. So the redeemable, irredeemable, so in case of there is a matured time is clearly specified along with the principal amount, if they are not paid any interest, so they want to settle, okay. And moving for the mutual fund, so mutual fund, which is nothing but the pooling money from this, either the saver like individuals or business or small unit or institution. So they are pooling as saving money from the individual. So the same whatever they pooled money from the saver, so which is going for the diversified company. So they are investing the simultaneously, they are investing for the different company. If one company, one segment, one sectors, if they are facing a loss, they simultaneously they are trying to balance a profit, okay. So losses, the return of the principal amount, the mutual fund pool money from the multiple investors to invest the diversified portfolio of stock. So whatever they pooled from the saver, which is investor, what they are investing in the mutual fund, the same amount which is going for the different portfolio in case of stock. And either the mutual fund sponsor, they can invest through stock or bond and other security, what and all which is available in the capital market. So then they are trying to generate a revenue return. For example, they are investing a specific company like IT industry, so they are getting a returns around 12%. So the 12%, but they are paying only for 8% or 9% for the those who are invested, okay. So the company, the remaining margin they are keeping for them operation. And the next one, exchange traded fund. Traded fund, which is exchange traded fund. So because of the name only, which is clearly specifying here, exchange traded fund are similar to mutual fund, but trade on the stock exchange like individual stock. But in case of mutual fund, we are try to go for diversifying a portfolio. But in here, exchange trade fund, so a company A to company B, B company to C company, so which is exchanging for individual stocks, okay. And moving forward, So the fifth instrument, derivative, which is always going for the contract basis. Okay, so here the common type of including option and future used for the hedging and speculating. So here the daily day to day we are finding the movements, either which is going for a day to day trading, buying and selling. Okay, any company like which is talking related to bank nifty or nifty 50. Okay, so here the completely derivative which is going based on the option and trading. Okay, and next sixth instrument, real estate investment. So which is also coming under the capital market instrument. Real estate sector are booming nowadays. So obviously the real estate investment trust, okay, allow investor to pool their money to invest in the real estate property, because there are too many layout are developing day by day, the infrastructure, okay, based on the cost of living. Okay, so the property demand is very increasing. Everybody's are keen interested to go for investing in the real estate. Okay, so which is also one kind of a pooling investors, such as residential, commercial and industrial. Okay, so based on the requirement for the needy people, like so they want to start in future business, they are trying to go for commercial or industry purpose, so they are investing in the real estate investment. Next one, prepared share. Okay, the prepared share, no doubt, which is a preference share. So we can take which share is having a preference rights. Okay, the priority, the preference rights. So they offer to fixed dividend. In case of equity dividend, there is no fixed dividend. But in case of preference dividend, so which is carrying for the fixed rate of dividend. Okay, so and have a higher claim on the company asset, because at the time of liquidation or winding up any company, so before giving a priority to equity shareholders, so priority is first given to the preference shareholder, because the preference shareholders are having a preferential rights in the asset. And then common shares in the even bankruptcy. So here in case of the company, they don't have an ability to go for payment, so we call it as a insufficient. So insolvency because of bankruptcy. So that's what in that case the preference shareholders are given priority. And next one, treasury security. Treasury security, these are the issued by the government. Purely we are talking related to government. Consider one of the safest investment, the treasury, because investor before starting going for investment, they want safety and protection. So that's what they try to go for treasury security, which is also generating a returns for the investors. They include treasury bill, okay, treasury note. Okay, we can the treasury bill and treasury note, which is also generating. And the commercial paper, short term under commercial, short term unsecured debt issued by the corporation, typically used in the short time financial needs. So in case of money market, we are talking the commercial paper, which is purely talking related to commercial bank. And next one, recent trend in the capital market. What are the recent trend? Okay, so either we are focusing only for India or globe wise. Okay, worldwide we are, if you are speaking. Okay, here the increase retail participation, because the number of retail participation without taking any brokers, they are directly approaching. Okay, the retail investor participating in the capital market, often driven by the commission free trading app and increasing access to the financial information, because the particular we are using a electronic platform or mobile application. So any retailer, they are investor, they are trying to go for investing because they have a complete freedom, so they can avoid the commission. And next one, rise of special purpose acquisition company. Acquisition means which is one kind of company, A company are acquiring for the B company. So when they are acquiring a company for other company, similar company, when they are acquiring, they need capital, right? So that is also one kind of a recent development here. And the special purpose acquisition company gain immense popularity in the year leading 2021. Okay, so there is a lot of demand. So there are shell company created for the sole purpose for acquiring existing company, because if any specific company are facing a loss, if they don't want to continue their business, they are trying to select a similar company, what they are doing an activity, what they are carrying for existing company, they are trying to go for acquiring that particular company. Allow them to public without the traditional IOP, means IOP stand for initial public offer. Okay, so here the complete freedom is there for to investor. Next one, sustainability and ESG. Okay, environment, social investment. Investors are looking for companies that adhere to the sustainable social responsibility practice. So because the environmental related whatever the scheme is introducing, or capital with the help of development, we are talking related to the social responsibility practice. So this trend has to lead the development of the, so especially which is talking related to infrastructure, the project development undertaken by the government, state government and central government. Okay, so indicate the integration of ESG factor into the investment strategy. Okay, so environmental, social, government, so which is involved. Next one, the fourth one, remote trading and digital transformation. Remote trading and digital transformation. So throughout the population, so we are finding an investor because they want to generate a revenue because of a digital platform, available digital platform. The investors are getting a lot of benefits here. The COVID-19 pandemic accelerating the adoption of digital technology in the financial industry. So the sitting in the home only, they try to go for investing, generating a revenue either which is based on the dividend or interest. Okay, so obviously the digital platform are providing a lot of benefit for the investor as well as issuers. And next one, cryptocurrency integration. Now, no doubt in the new trend, there is a lot of demand for cryptocurrency as well as Bitcoin. So the cryptocurrency has gained tractions in the financial market. Bitcoin and Ethereum leading the way. So everybody is going for not only for Indian companies, so they are trying to going for investing in the cryptocurrency as well as Bitcoin. Okay, so next sixth one, globalization and cross-border investment. Globalization, because of LPG, each and every country have a freedom to go for investing anywhere in the world. So here globalization, cross-border investment. The capital market have become increasingly global, because Indian investor, if they want to invest for US or Japan, Germany, it is possible because of this concept. With the investor looking for the opportunity behind their domestic market. So in case of if they are investing in the Indian company or Indian any security, so the same time if they are trying to go for investing for other instrument, whatever it is available in the globe wise, this trend has been facilitated by the advancement in the technology and access of international market, because we are not only focusing for national market or national investment or domestic investment, where sometimes we need to go for extending our investment procedure and investment strategy for generating a revenue in the international market. So alternative investment. What are the alternative investments are available? Okay, so the investor are exploring the alternative asset class like private equity, venture capital, private equity which is issued by the private company, and the venture capital. So if anybody have a innovative idea, startup which is talking related investing for the new startup. Okay, and real estate and traditional asset face increase by the volatility and uncertainty. So these are the alternative investments. So there are too many instruments are available. So we, as a financial student, we must identify which instrument are generating a more revenue, what is the risk factors connected for the instrument. And the next one, quantitative and algorithm trading. Quantitative and algorithm which is talking related to software development. So with the help of trading algorithm tools and techniques, the quantitative and algorithm trading strategy continue to gain prominence. So which is within a fraction of second, the algorithm is calculating the returns, what is the principal amount, when is the payback period. So everything is calculated. This strategy rely on the complex mathematical model and algorithm to make trading decision. So if you don't have any knowledge about investment planning, so the using a algorithm mathematical tools as an investor can take a decision. So last one, rise a sustainable finance. Sustainable finance is becoming a significant aspect of the capital market. So anybody, if they want to sustain for long periods, so they obviously they're expecting a return. So when the timely expecting a return, which is going for the sustainable finance here, and this include green bond because you need to give a priority for the environmental, so which is talking related to green bond, okay, and the sustainable investment fund and other financial instrument aim to the supporting environmental friendly project and initiative, because of government having a too many responsibility for the environmental. So not only for the government, even the individuals are taking a part, okay, they are going for investing for the sustainable project, so that you can go for developing an infrastructure, okay, so which is very connected for the environmental. Thank you. Keep on watch for next section.